presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup filling in for Tom O'Brien. You're watching the Tom O'Brien Show on TFNN. Hope you all are having a great day. Let's take a look at what we got going on in the market right now. Really not a whole lot. The composite off about 0.31%. The Dow Jones Industrial off about 0.63%. The dollar remaining higher. You've had a lot of weird kind of economic data come out, right? Doesn't seem like rates are really going to need to be lowered in such a quick manner. Of course, this all kind of depends what we get in the months coming forward. But we're trading up in the higher range right now, trading at 102. So I mean, this is really getting out of that low 100 area that the market was kind of wanting for the dollar, especially in light of lower interest rates. You have really the big news as well is crude. So crude has made some massive moves to the upside, at least in the Brent, trading up about 5.44%, and then in the forward contract, 5.55%. Obviously, the big news on that is really this kind of nexus around Israel's kind of motions in the Middle East, right? So we're talking a little bit how they're fighting Hezbollah and Lebanon. They also struck some target in Syria that landed pretty close to a Russian embassy. And so the Russians just recently asked, or at least advised, most of their citizens who lived in Israel, which is about 1.5 million, to get out of Israel while you still have the chance to do so. Obviously that's pretty loaded language in a sense, I would suppose. And then you had Biden as well say that Israel may attack Iranian facilities. So something along those lines would absolutely disrupt the oil industry in and of itself. This causes a big issue. We're also getting into a colder season, of course. You're seeing natural gas go up with that kind of stuff. Let's look a little bit at what Biden was saying. He said Biden added that the U.S. advises the Israeli government on military operations, but doesn't dictate them, which is a little bit stressful, honestly. And there's nothing going to happen today, he says, but we'll talk about that later, which is also a little strange. This is really ramping up. I think there's a lot of strange kind of philosophy going on at the upper levels of Netanyahu's government as well that can kind of add a little bit of fire to this entire situation. And any kind of severe breakdown in Iranian and Israeli relationships, obviously they're pretty broken down now, but an actual conflict would cause major issues. So we're looking at that. As it stands now, this is really people kind of hedging against any potential conflict that may arise. You had the E-mini off about 0.43%, that gold contract, doing okay today, trading at $2,677.90. I do believe as well, if we get some really strong stimulus, which you are seeing at least reflected in the Chinese stock market, you're going to get some continued buying of gold to that upside as well. We're also going to have Tim Ord on in the next segment, so make sure to stay tuned for that because he's going to have some good insights for us as well. Copper getting a little bit knocked down today, trading down about 2.3% at 450 on that contract. And then the Russell, again, talking about this idea of the dollar going higher, no one's really sure exactly how this economy is going to kind of pan out. I mean, your small caps are not exploding. And usually when you get a major contraction like 50 basis points in interest rates, you're going to see small caps get pretty strong, right? And we're not really seeing that right now. Silver's up about 1.35%. Let's see, Celsius took a dive today as well. I think that's kind of just general technicals occurring in Celsius because no large news came out, but we were speaking about them a little bit yesterday. If you missed that, you should check out the archive on our YouTube channel. It's Tiger Financial News Network. See, Steel Dynamics not doing much either. Meta doing all right today. Yeah. And we'll see again. What I'm anticipating for Steel Dynamics is probably a pullback to this 120 level and a rejection at that. And if that's the case, I think we have a new trading pattern getting formed. And their Tesla's off in a big way today, off about 4%. You're having their big robo-taxi reveal here in a couple days on the 8th. And they just had the chief information officer quit. You've had a lot of other C-suite executives quit recently as well. They just came out, they plan $800 million debt sale backed by prime leases, trying to get some more access to capital that route instead of diluting the stock in any way. So it's preparing to sell $783 million in debt backed by automotive leases to from its prime borrowers amid a surge in similar asset-backed securities within the industry. And that's kind of about what we have today on Tesla. But yeah, I think the CIO checking out is obviously a major issue. Because in my opinion, I mean, the information that it has in its kind of like tech suite and how it defends against certain attacks and deploy these kind of things is really what makes Tesla so valuable. It's not so much, the car development or anything like that, but it's going to be that automation. And then of course, if they can get everyone onto the similar charging platform that they have, that obviously will be massive for them as well. Kind of in this news, you have EVGO, which blew up today. We'll take a look at these guys right now. Yeah, so up 60.43%, trading really from above $4. Essentially, they got a lot of money from the U.S. Department of Energy to expand the networks, and they do the charging stations. So this is massive. And again, this is what I've been saying for a relatively long time, especially, people can get into these kind of mind spaces with, really wonky, negative PE companies or super high PE companies and stuff like that. And, or the effectiveness of things like electric vehicles. But the point is that this government, and regardless of who wins in this election, it's going to continue to happen as well, continues to dump a ton of money into alternatives, right? So you had the Department of Energy give them $1.05 billion. That's a conditional loan guarantee. The financing would allow the Los Angeles-based company to build out about 7,500 additional fast charging stalls across the U.S. and states, including Arizona, California, Florida, Georgia, Illinois, which is pretty solid. This current administration is pushed to build 500,000 strong national electric vehicle charging network by 2030. And I promise you, there's a ton of spaces, especially in areas, Florida. Texas isn't listed, but same kind of concept where you just have these kind of vast lots that are kind of empty now, with the fall of certain kind of large department store brands. This is a perfect spot for them, and I see them being utilized, at least in St. Petersburg, through this route as well. Incentives will also lower installation costs for operators, as charging plugs are more expensive in the U.S. than any other region. EVGO operates nearly 1,000 fast charging stations currently, and they recently partnered with General Motors to install an additional 400. So definitely some really positive news for EV bros in general, but also EVGO. Folks, stay right there. We'll be right back with Tim Ord of the Ord Oracle. Take a look at what's going on at the market and gold.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, everyone. This is Jacob Schub filling in for Tom O'Brien. This is the Tom O'Brien Show. We are still waiting on Tim Ord, but let's take a look at some other stuff before we get him on the line here. Take a look at NVIDIA, obviously the big guy in the spotlight today. See if we can get it loaded up here. Well, that's fine. While I'm waiting for my charts to load here, basically the big news is Jensen Huang is a great CEO and really blew up the stock in a nice way today, up about 3%. So it rises on him essentially saying there is insane chip demand still. And this is something I've been a little skeptical about, right? I mean, you have so much deployment of capital right out at the beginning, that I get concerned that there's not going to be enough demand going forward. Well, they're coming out with the Blackwell chips, which are supposed to be very nice for this entire kind of process. Dipped as much as 5% earlier, but you kind of come back down a little bit as it stands. This is in an interview with CNBC on Wednesday after the market closed. Wang confirmed that the chips are in full production despite recent design issues that caused some delays in customer rollouts. Blackwell is as planned, Wang said. Everybody wants to have the most and everybody wants to be the first, which is fantastic. Obviously, they have a really nice kind of built-in customer with OpenAI who just got billions of dollars in the last round of funding, I think 6.6 to be exact, which is pretty fantastic. So it says here the Blackwell delays have caused concern for investors, but that's all right. Everything's going all right with that. Since then, the market's seen a rotation out of big tech, while other macroeconomic factors such as China trade fears have also hampered NVIDIA's stock price. We will get back to that a little bit after our guest today. Now, every Tuesday and Thursday, Tom O'Brien has Tim Ord on. Tim Ord has a newsletter called the Ord Oracle. It's fantastic. Go give it a check out here at ord-oracle.com. Additionally, if you go over to TFNN.com, you get down to the services tab here. And then we have two fantastic webinars from Tim Ord. There's the Secret Science of Market Tops, and then the 6 secret ratios every trader should know. They are fantastic. Tim, how are you doing?
I'm glad to be back.
Fantastic. Glad to have you here. So kind of interesting what's going on in the market. A little bit like what you were saying the last few times we had you on. Kind of not a lot really happening in a major way, I'm curious to see what you're looking at today and if any of your more recent analysis kind of change that outlook for the short term.
Actually, a little bit has. Actually, this is Trump's was a candidate in 2016. He was also a candidate in 2020.
Yep.
And went back in 2016. This is chart number 1. And we'll take a look at it. And actually, on my report yesterday, I says, well, the next low will be when the 10-day average gets up around 1.2 or higher. That will signal enough panic for the next low. And a lot of times in election years, the low comes right around the election time frame. Anyhow, let's take a look at 2016 here. And that's that pink shaded area. I shaded pink area. In the bottom window is a 10-day trend. And if you notice, November 5th is election day, and I have a red line on that November period. If you notice that the 10-day trend did not get into bullish territory. Matter of fact, it was fairly neutral, not even leaning on the bearish side.
Yeah.
So the 10-day trend, at least for the 2016 low, did not pick the bottom out. But what did is the SPX tilt ratios RSI, which is the top window, the RSI for that SPX ratio. Well, anyhow, the top window is the RSI for the SPX tilt ratio, which is next window down, and window below that's the SPX, and the bottom one's the 10-day trend. So the 10-day trend for this that time around wasn't really useful. So anyhow, again, the RSI for the SPX did pick out that November low. So let's go look at 2020, which is the next chart.
Got it up.
Same thing. Trump's a candidate. This time around is Biden instead of Clinton, and the same thing kind of materialized. The 10-day trend, which is the bottom window again, didn't really see panic at that November low. Matter of fact, it was fairly neutral. But if you look at the RSI, it did pick out that low. November, there's another low back in late September. That's those two red lines there. We're talking about the pink shaded area again. But it did pick out that November low again. Actually, it looks like a late October low right before the election. So once the market knows who's going to be elected, it starts going up. So it won't be on November 5th and the market starts heading up. It'll be probably, several days before. I don't know how many days before, but the market will know what will happen. So anyhow, the RSI, again, for the SPX tilt ratio did pick out that low. So let's look at the current time frame.
All right.
Current time frame. The top window is the RSI. The second window down is the SPX tilt ratio. If you notice, the RSI did get up around 70 here about a week ago, suggesting the upside was limited. And kind of market has flipped sideways. And this sideways pattern is probably going to remain consistent. If you go back to chart number 2, the second window up from the bottom, the market virtually kind of gone sideways since about September high in a small trading range. Really didn't decline, but really didn't advance much. It just kind of trended sideways. If you go back to chart number 1, kind of the same similar situation. It did go down some, but not a lot. It kind of went sideways down a little bit. So let's go back to chart 13. I think in general, we're probably going to just move sideways here. Maybe at worst, go back to the previous low, 5,400 on the SPX. May not even get there. I have another indicator that I showed in my report here a couple of days ago. The NYSE summation index did hit over 1,000 on Monday. And normally when that happens, with the summation getting that high, it shows really strength in the market. And you can have small declines, but not big declines. And so at worst case, I think it's 5,400, and I don't think we'll even get there. But in general, I think this market's going to go sideways right into the election time frame. And I do think it's going to be a bottom. There's a lot of strength in the market and several different indicators. And this is a consolidation right before a big rally starts. And that rally is going to start around the November 5th election time frame, but probably several days before that. So I'm not going to be in a hurry to get a trade on because we're still basically a month away for that election. Unless it's really a strong signal, I'm going to kind of remain neutral and wait for that trade to line up. Right. So let's look on chart. We're running out of time here, aren't we?
Yeah, we can pull up chart 4 there and discuss it a little bit, and then once we hit the break, we can just continue where we left off on it.
All right. Anyhow, this chart number 4, is the bottom window is the VIX. Second window up is the SPY VIX ratio, and I'll hold. So
good deal. Yeah, Tim, stay right there, folks. Stay right there. We'll be right back with Tim Ord of the Ord Oracle.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. This is Jacob Shute filling in for Tom O'Brien. We are joined by Tim Ord of the Ord Oracle. Tim, just do a quick recap what we were talking about before the break, kind of just looking at some kind of sideways movement up until election time, and then a potential pretty strong rally from there.
kind of is a little bit of a warning chart. This is chart number 4. And anyhow, the bottom window is the VIX. Second window up is the SPX VIX ratio. And the next window up is the SPX. But anyhow, there's usually the market will stall when the SPX is making higher highs and the SPX VIX ratio makes a lower high. And the pink areas across the chart show the times when that setup occurred, and the blue parts, or the light green parts, I guess, when the S&Ps was making higher highs and that ratio was making higher highs. So when that happens, the bullish divergence, when the SPX makes higher highs and the ratio makes lower highs, that's the bearish divergence. And we have a bearish divergence going on basically since July. And if you notice, market is setting at an all-time new high here, but the ratio keeps making lower highs as the SPX makes ratio higher highs. So that the upside is very limited here. The market's not going to go up, and in my opinion, it's not going to go down much. So you're just going to have to kind of wait it out and wait for the market decide who's going to be the winner, which it will before even the market official announcements made. The market will know, and that'll be the time to go long. So a lot of times this indicator can give bullish signals too. So, but right now it's leaning bearish. So I'm kind of just comfortable. I'm on the sidelines right now, kind of just staying there, not seeing any, even on a short-term basis here, not any worthwhile trades other than a quarter pound bounce up or now. I know, in a nutshell, I kind of recommend just staying neutral right now.
Right.
Wait till it gets close to election. I'll be on your radio show and see if we can get close to that next low. So there may be a minor low between now and then, and if it lines up good enough, we may play it and we may not. We'll have to wait and see. So, but the equity market, in my opinion, is pretty much just sideways here. It's just markets don't like uncertainty.
Sure.
And so, and there's a lot of uncertainty right now. It's a toss-up who's going to win the election. So
definitely, and you're seeing that reflected in the
commit either way right now, either long or short.
Absolutely, absolutely. Yeah, and you're seeing it reflected right now with, I mean, not a whole lot has been going on in any major way, at least reflecting in the market. So, all right, we actually do have some gold charts as well, which I know we're all interested in looking about. You've kind of got some, we're sitting at a pretty high level here in gold, at least in the contract itself. Some minor movement in the miners. We're looking at the weekly GDX here. If you got any good insight on it here.
Yeah. Actually, for some reason, there's no divergence on this GDX chart. And so anyhow, the first chart up is chart number 5 here. The top window is weekly GDX. Next window lower is the cumulative up-down volume percent for GDX with this Bollinger Band. And the next chart lower is a cumulative GDX advanced decline percent. So in a nutshell, when those two indicators are above mid-Bollinger Band, it's in an uptrend. When it's below the Bollinger Band, it's in a downtrend. And a lot of times this indicator also gives divergence. I have a couple of, back in late 2023, I have a red line on the GDX chart, or kind of an arrow rather, and also I have an arrow on the GDX up-down volume where GDX was making higher highs, that indicator was making lower highs. That was a negative divergence. Market went down, and kind of same thing happened in late 2023, early 2024. GDX was making higher highs, and that indicator made lower highs, and you had a pullback. Since then, we've been we went above the mid-Bollinger Band back in March of this year, and we're pretty much just stayed there. And right now, GDX in general has made higher highs, higher lows, and both indicators in general has made higher highs, higher lows. And that's the definition of an uptrend. And so not even on a short-term basis, at least on the weekly time frames, there's a divergence here. In my opinion, GDX in general is still going to move higher right into the election, if not after. So until some negative divergence show up, I don't see any trouble other than a minor pullback here than there. it's not giving any worthwhile signs of any worthwhile pullback. I'll put it that way. So let's go to chart number 6.
Yeah.
And this is another way to look at the market. The bottom window is I think this is a daily chart. Yeah, it's a daily GDX chart. The top window is GDX. The bottom window is the daily up-down volume percent with a 50-day average. So it's a little bit different indicator than one before. It's a cumulative. This is just a 50-day average. And in general, when this indicator is above 50, above 0, which we're in around almost plus 12 vicinity right now, the market in general should keep moving higher. So this indicator is not giving any bearish signs either. So we're up against the highs of 2022, up around that 40 range, and it doesn't appear we're going to back away from it. So we're probably going to eat right through it and probably just keep on going. So that indicator is not giving any signs of even a shorter term top. And let's go to charts number 7.
Sure.
And this is the longer term view. So this indicator gives a signal, and once it gets a signal, it's usually at least a year and a half, and it can go as long as 4 years. And we're currently on a buy signal back. I think it flipped back in March of I'm eyeballing it here. It looks like about March of this year also. And the signal is generated. Right now, at the bottom window is the up-down volume, the cumulative up-down volume on a monthly scale, and it gives a buy signal when the indicator is above the mid-Bollinger Band, and the next higher window is advanced decline cumulative on a monthly time frame. And same thing, buy signal when you're above the mid-Bollinger Band, and both indicators are above the mid-Bollinger Band. They have been since early this year, and the monthly charts are not showing any divergence whatsoever either, so it's trends up. I don't see a pull. I don't even see sideways. I think it's just going to keep moving higher.
Fantastic. Tim, thank you so much for joining us. We're looking forward to seeing you Tuesday.
All right. Thanks a lot.
Folks, stay right there. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. Jacob Shute, filling in for Tom O'Brien. We just had Tim Oracle on. Fantastic interview, as always. If you missed that, you can always go ahead to Tiger Financial News Network on YouTube after the end of programming. We're going to have that little excerpt up for you. You can sit back there, kind of, look over what Tim was saying and digest it a little better. Again, additionally, if you're interested in what Tim's doing, you can go over to TFNN.com, go to the Services tab right here, and we have 2 fantastic webinars, Secret Signs of Market Tops with Tim Ward and 6 Secret Ratios. A lot of secrets, but he's telling you about them. And then, of course, the ord-oracle.com. Now, talk a little bit on the video. That's fine. I really want to move on to So this is really interesting. They got a big nosedive today on the news that Eli Lilly's drugs are no longer on the short list. Of course, Hims was getting some good money from compounding some of these GLP-1s. So Eli Lilly, I'm not sure why this is not loading. I apologize for that. Essentially, okay, here we go. Perfect. The ADHD runs strong. This doesn't work. Anyways, they were compounding GLP-1s, right? Yeah, you can see right here, off about 10.7% right now from a high earlier this month of 1936. So Eli Lilly, of course, makes Mounjaro and Zepbound. They were facing supply constraints. You had a bunch of basically compounding companies selling the GLP-1s in a way in order to kind of meet that demand. I don't buy this. I don't buy this sell-off, and I'm going to tell you why. And it's because, really, Eli Lilly doesn't make semaglutide. Okay, that's Novo Nordisk, which is still on the short list. Okay, so Hims can still continue to compound semaglutide. Eli Lilly uses tirzepatide. Now, you definitely still run the risk of, and it probably is going to happen very soon, that short list is kind of no longer going to... excuse me, guys. Sorry, I must not have my mic on. I apologize for that. Give you a long story short, Hims went down. I don't know how much you missed on that. Hims went off about 10.79% because Eli Lilly, their tirzepatide is no longer on the FDA short list. Hims was making a bunch of money from compounding GLP-1, but they were compounding semaglutide. That's the one that Novo Nordisk makes, which is still on that FDI shortage list. So they can still, at least in the near term, continue to do that compounding semaglutide. Another thing that's super interesting to keep in mind is these guys made a ton of money, right? Then it had nothing to do with them compounding these GLP-1 drugs, okay? So regardless of whether or not they're able to produce it because of an FDA shortage, they're still making really good money and still having pretty insane growth, or at least they have compared, if we're going off of their most recent kind of financials. I mean, there's a very small percentage that they're making off of this. Additionally, what's super interesting is that the compounding customization operates regardless of shortage. So this idea that exists is that if you design this kind of stuff, right, for an individual, they can still make these drugs and they can still compound it. They bought that 503B compounding facility that was located in the US. They bought that for approximately $31 million. This is pretty crazy. They're also planning on offering still both semaglutide and tirzepatide. Again, this has to be personalized, but they can still offer these kind of solutions, right? Another thing that's interesting, that's going to have to come with Eli Lilly, is the amount of people who have probably gotten on to these drugs, like anything that's tirzepatide related, such as like Wegovy or Zepbound. I think there's probably a lot more consumers of this now because you had so much more of it entering the market because of these kind of compounding companies. It'll be interesting to see if they can keep up with that demand. Still, I think Hims does a very good job of making it so you can get these kind of personalized GLP-1 compounds. Of course, you need to be able to have a script from a doctor to do, but that's the same case with Eli Lilly and Novo Nordisk. So I don't know if this is an insane overreaction. Part of me wants to say that it kind of is because they're still so dominant in a lot of different ways, and it's not like it's chewing into a massive amount of their income, essentially their revenue. It remains to be seen kind of what happens with that, but I think this is a pretty staunch reaction to this. You hear me now? Perfect. Sorry about that, guys. I had to get up in the middle of the break to do something. All right, along those lines as well, you have some more weird news for Eli Lilly and Novo Nordisk. Now, usually this stuff doesn't really affect the kind of the stock price of these companies. We have Texas Attorney General is suing insulin makers and pharmacy middlemen over higher costs, which this is definitely something, that needs to be done, I would say, in a sense, because it's so cheap to make insulin and it really gets inflated in a major way. So the Texas Attorney General has sued leading insulin manufacturers and pharmacy benefit managers, accusing them of collaborating to inflate the cost of insulin. Okay, one moment here. All right, yeah, so Texas Attorney General Ken Paxton, they're hitting Eli Lilly, Novo Nordisk, Sanofi. The office also sued CVS, CareMake, Cigna's, Express Scripts, United Healthcare, Optum Rx. This is, again, why I think things and solutions like Hims are so interesting, because you skip this whole deal, right? I mean, really what Hims is doing is not just offering, GLP-1 or, things like Cialis and stuff like that, or finasteride. They're directly challenging the way that consumers are able to access some of these compounds, right? And I think that in and of itself is a very beneficial and positive thing for Hims. So keep your eye on this company because I think there's, in my opinion, I think this is kind of I don't want to say it's a buy the dip moment or anything like that. Because I think over the long term, you're still having some slow movement in Hims. You get this massive kind of come down and really a move up on no volume whatsoever. And then, halfway retrace to this kind of low in September, right? Or really, honestly, even the breakout, right? The high volume breakout there. If we can reject this level and keep moving up, I think that's a positive for it. But they still have some ways to go. They burn through a lot of capital doing marketing as well, which I think is somewhat of an issue for them. But they are very ubiquitous on online platforms, which I think is fantastic. And, a lot of young guys, even my age group, one of the big things I think that people stress out about is kind of hair loss, right? And there's been a meme culture that's designed around that. And so, they want finasteride and all these different kind of compounds that prevent that or kind of help hair grow back. And Hims offers that solution as well. In the past, you would have to go to relatively sketchy websites that sold different kind of compounds to buy them. Everything was completely legal, but it's just a little bit strange. And so having it kind of corporatized in this sense, in the way that Hims has done it, I think can really play into their favor in a major way. And of course, too, if you want any more kind of assurance that this method at least gets attention from pretty high players, I believe Mark Cuban has his own company that does somewhat similar stuff. I don't think the exact same things as Hims, but at least you get some players at that kind of strata who think that there is some kind of value at this kind of level. Folks, stay right there. We'll be right back for a short segment.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
What's going on, everyone? Jacob Shoup filling in for Tom O'Brien. We only have a short segment here, so I want to take a look at some kind of conflicting economic activities going on right now. You have the manufacturing activity contracting for the 6th straight month, staying right at that 47.2 on the ISM. You have employment gauge fell 2.1 to 43.9%. Firms are trying to find the right size workforces to levels consistent with demand. You have pay for job changers rising at the slowest pace in more than 3 years, right? So you have some kind of conflict with that. And then private payrolls were better than expected, the growth of 143,000 in September. So a lot of weird kind of things going on here that are obviously going to kind of impact how the Fed decides they want to kind of continue going forward. I think you're seeing this kind of uncertainty reflected in a strengthening dollar right now, and then really kind of a sideways Russell. And then, of course, you have everything going on with the strikes, right? You have a lot of retailers are trying to figure out how they're going to bolster themselves against these strikes if they continue for many months. I think this is something that probably needs to get resolved relatively quickly, especially since we're coming in to a super busy season here, obviously for consumption. I'm going to pull over this article right here. These are the people who, the highest number of shipments, basically from the U.S. East Coast ports. These guys are going to be basically impacted by this. The largest dock worker strike in nearly 50 years has entered its 3rd day at the U.S. East Coast ports, is threatening shortage of goods ranging from bananas to auto parts and causing a backlog of ships anchored outside major ports. Major retailers are implementing backup shipping plans to ensure goods arrive in time for peak holiday season. According to the bill landing data from Import Yeti, a data firm, here's some of the top retailers that have the highest users of East. Okay, anyways, let's take a look. You have IKEA, RTG Furniture, you have Adidas, Walmart, Goodyear, QVC, Tractor Supply, major, Kroger, major, H&M, not super major, but still a big player. Dollar General for sure, which is this is absolutely not what they need in any capacity. Ralph Lauren, L'Oreal, Levi Strauss. I mean, these guys, they could get really impacted, you know? I mean, it goes south if it doesn't get resolved pretty quickly. Folks, thank you so much for joining me today. I hope you all had a great day. We will see you tomorrow at 9 a.m. Eastern Time with Tommy O'Brien in the morning market kickoff. Take care. We'll see you then.